This is the Asia Trade live from the Bloomberg New Economy Forum in Singapore. I'm Shery.
And I'm Avril Huang. Here are your top stories this hour. Nvidia's strong sales forecast helping counter fears that an explosion in AI spending is headed for a crash. Shares jumping in late trade. We'll speak exclusively this hour with CEO Jensen Huang.
Nvidia's results set to boost sentiment in Asia, even as traders almost price out a Fed rate cut next month, with no U.S. jobs report to be released for October.
And more great conversations ahead from day 2 here at the Bloomberg New Economy Forum. We're talking chip supply chains with the CEO of Silicon Box and tackling geopolitics with the Council on Foreign Relations and AlphaGeo. But for now, Shery, there really is only one story in town, Nvidia earnings. And we know how for the markets, this tends to be a sell the fact kind of event. But we are this time around coming off 2 weeks of selling in AI-related stocks. So we are seeing that sharp climb in Nvidia after it beat Wall Street projections. But we also heard from Jensen Huang dismissing the bubble fears. That's dragging up the other Max 7s as well. Alphabet is in the spotlight because its Gemini model has caused quite a stir. We'll talk about that later on in the program. But note that all this is coming despite the backdrop of traders pricing out more or less a Fed rate cut next month. There is as well that Fed minutes to contend with, Shery.
Yeah, take a look at that rally in the after-hour session. We're seeing all of those things in the green, and it's really surprising that we're getting that risk-on sentiment. Of course, the bar has been lowered now, or given, of course, the expectations about an AI bubble, and CEO Jensen Huang saying that we're really not seeing an AI bubble fears on his earnings call. In fact, for more on Nvidia's outlook, let's bring in Bloomberg Tech co-anchor Ed Ludlow in San Francisco. Ed.
Yeah, it's very interesting to look at that fiscal fourth quarter sales outlook in particular. $65 billion plus or minus 2% does not assume any sales to China for one. But it was interesting in the course of the call for Colette Kress, Nvidia's CFO, to explain that in the quarter gone, they did have some approvals to sell H20 into China. But there wasn't any interest there. They do not yet have any agreement with either the United States government or the Chinese government for what they called more competitive generations of data center compute. So China's still an unknown, but everyone on the call was really focused on the longer term, right? And this idea that they've guided us previously on a $500 billion sales trajectory through the end of calendar 26. And that number could grow was the main takeaway. They continue to do what Nvidia always does, talk about how across enterprise software companies and the AI labs that they partner with, there is evidence there that all the investment's now paying off. There are sales to show for it, revenues to show for it. And the market believes that that story is intact.
And what I really want to ask you is what you're going to ask Jensen Huang later. But talk to us about how perhaps for future growth, the Middle East might contribute to this, right? If we are sort of taking China out of the equation.
Really important question, because I think the breaking news of literally the last 15 minutes or so is that the US Commerce Department has approved the sale of those Nvidia chips to Huang, the AI startup or umbrella holding company that's administering the relationship between the United States, its GPU providers, and what's happening in Saudi Arabia. So that will be significant. And I guess we could ask Jensen Huang, do the numbers that you forecasted take into account that Middle East revenue? If they don't, that's even more upside, which is interesting. I think outside of that, Nvidia said that they are, quote, sold out of the Blackwell generation of GPU. And one analyst on the call made an attempt to say, can you kind of explain what you mean by that? If you guys are sold out, but you're also telling us that your $500 billion sales outlook could grow, how do you recognize those two things? How much of a limiting factor is being supply constrained right now? And those are all things that are ripe for discussion within the hour.
And of course, we understand the whole idea from Nvidia that the best defense is the best offense. But at the same time, there are concerns that these deals with money going back and forth from all of these companies could actually represent an AI bubble.
Yeah, I mean, Jensen Huang was asked about at least where is the money coming from for all of these projects, and the short answer is cash flows of the hyperscalers in the first part. What Jensen Huang said is it is up to them how they finance them. Nvidia's position has been for quite some time that just because it gives money to an AI lab, it does not require that AI lab to use the money to buy Nvidia GPUs. Nvidia could give money to OpenAI as the easy example, and then OpenAI could use that funding to go and buy AMD GPUs. But the news of this week is counter to that, right? The relationship between Nvidia and Anthropic was discussed on the earnings call. In that scenario, Nvidia invests heavily, but Anthropic does buy Nvidia GPUs. So we'll ask about that.
Yeah, we'll be looking forward to that conversation. Ed Lutlow, Bloomberg Tech co-anchor there with the latest on Nvidia. And of course, a reminder that we are speaking exclusively to the CEO and president of Nvidia, Jensen Huang, later this hour.
In the meantime, take a look at Alphabet shares because they gained after these glowing analyst reviews for its new Gemini AI model. And that really spurred confidence about its position in the AI landscape. So this is a bit of a contrast with the lukewarm response that we got earlier this year to OpenAI's GPT-5. Now, the company says Gemini 3 represents a massive jump in reasoning, in coding ability, and the stock rally extends a banner year for Alphabet with its 57% jump, making it the best performer of the Mag 7 share.
And really what this means for Asian stocks, right? Especially given the tech-heavy markets like the Kospi, where you have Samsung, SK Hynix taking about 30% of that market cap. We'll also be watching those tech names around in Japan like Tokyo Electron. Nikkei futures now pointing to the upside of 1.4% after falling to a one-month low. This is a very interesting dynamic that you're seeing in Japan because you have the Japanese yen continuing to weaken. So we're on intervention watch. We have heard from the finance minister, but what we're watching right now is at 160 level. The last time that they intervened was 160.17. Right now we're surpassing 157 to the lowest levels since January. Although a survey by the Bank of America now says that global investors expect the yen to have its best returns in 2026, so hold out for that. The offshore yuan holding at that 70.11 level. Let's bring in our Asia Markets executive editor, Paul Dobson, for the latest on the markets. And really, Paul, is the story entirely today on tech and Nvidia, despite the fact that we've also been watching for that September jobs report coming from the U.S.
Yeah, morning, Shery. I think that that's going to be the dominant narrative today for sure, given how much attention there was on it and pressure. It's so established now that the earnings that we get from Nvidia are a beat. And nonetheless, the market loved the narrative and up. The stock went in after hours trading 5 to 6%, something like that. And futures are higher as well. So people are going to take some heart from that. Sort of listening to that narrative about being sold out of various products already, and the plans for further build out and investment still going ahead will give people confidence and heart in the AI story. I don't know how long it will last, given the backdrop that we've had recently. It's not just been that moment of doubt about the biggest chip makers, but about the companies that are building the data centers, the funding for that, and the utility and profitability of the AI products. Maybe the Google narrative actually helps that, the Gemini, that you were talking about, feeding off each other to provide a more positive backdrop for the equities market at least. But we do have those nagging doubts in the background as well. The Fed is not, it would seem, going to cut in December, or at least it's certainly not clear cut at this point that that's going to happen. And the market hasn't liked that very much as an idea. And it is giving the dollar strength, and it is weakening various currencies around our region, including the yen, which creates a different dynamic and some headaches for central bankers over here too.
Paul, you talk about headache. It is one for the FOMC that is as divided as it gets. And now we're hearing that the November jobs report is going to come after the December decision. I mean, how problematic is this? How does this shape trading?
It had me rolling my eyes when I read it this morning as I was getting in, Avril. I think it is difficult, right? We're in the dark a little bit at the moment. We will get some September data today, but how much use is that going to be? It's so backwards looking. And the sort of the private data that we're getting through has been quite inconsistent, although it is giving us this message that the labour market is weakening. We don't really know how much weaker is it. I think there are question marks against the US economy, particularly, this K-shaped narrative about the idea that people on lower incomes are really suffering and struggling here. And it's hard to see exactly what that looks like right now and how widespread it is and how problematic it is. And if we're not getting the data, then that's not really helping us get to grips with it either. So in the absence of those inputs, which, a data-dependent Fed can only go on the data and it doesn't have the data, then you would assume that they would carry on more or less on the trajectory that they're already on. And from what we get from those minutes, there's definitely significant reservations about the idea of of cutting interest rates at the December meeting. So, we'll see what we get from this September report. It would have to be pretty diabolical, I think, to change the trajectory that we're on in terms of financial markets at the moment. So all things being equal, that means probably higher interest rates in the US and probably a stronger dollar. And that would be a double drag on the tech stocks and be one more sort of mark in the doubts against the Nvidia fueled rally that we're expecting to see today.
Yeah, we are certainly seeing this repricing underway in bonds, in FX as well. Paul, always get analysis from you, our Asia Markets Executive Editor, Paul Dobson. Now, coming up on the Asia Trade, chip packaging firm Silicon Box joins us here at the Bloomberg New Economy Forum to discuss AI-driven demand. We'll ask the Council on Foreign Relations about the state of global trade flows. And geopolitical futurist Parag Khanna tells us his strategy for navigating uncertainty. Much more ahead. This is Bloomberg.
There are certain assets which have now become or be deemed national security assets, such as code, Gen AI type code, such as chips, semiconductors, the most advanced ones of them, such as data and cloud. And those assets are going to fragment. Those assets are going to have national boundaries.
HSBC CEO Georges Alaudderi speaking here at the Bloomberg New Economy Forum yesterday. Let's get more on those supply chains supporting the world's AI ambitions, because Shery, we know the likes of Silicon Box, right? Singapore-based semiconductor company focused on chiplets, on advanced packaging at panel scale technology. And this is really a company that works with customers and partners, including some of the world's largest advanced chip companies.
Yeah, let's discuss our outlook for business and growth on the AI demand. Joining us now is Jen-Hsun, co-founder and CEO of Silicon Box. Great to have you with us, and thank you so much for coming this early to talk to us. There's a lot of optimism on the artificial intelligence sector, and we just heard from Nvidia's Jensen Huang that he also does not see a bubble. What's your outlook on demand?
Well, we see the big demand in the AI, of course, but also we start to see the recovery of a lot of other businesses, including mobile and automotive. So we gradually see. If you look at the big picture of the thing in the semiconductor, we are about witnessing the revolutionary change is a chiplet movement. Actually, the AI is only a small part of the chiplet, which has the highest demand today.
But it's the one that garners the most attention.
Exactly, highest demand. So there's a peak. So whether it's too high demand or too small demand, which it's jury's out there.
So when you look at your business, then you look at chiplets and, of course, the advanced packaging at panel scale, and those are the two innovations that you're pushing forward. And then you look at the artificial intelligence demand. What is sort of the ratio that you're seeing for your performance?
Today, the demand of the artificial intelligence is a lot. But actual market size of other devices is also coming in very strong. So if you say demand, probably I would say about 40, 60.
So who are some of the partners that you're working with? and what are they looking for in this market?
We have many partners, including the artificial intelligence, but also we have space program customers. We also have automotive customers, and a lot of this power supply, which is a lot of demand when you talk about this. How much of energy has to be spent. So those are customers a big demand.
You are also partnering with governments, like in Italy, you're expanding your plant. What about places like South Korea? Because during APEC, for example, we saw this incredible focus on wanting to build out the AI infrastructure.
I think the South Korea and Taiwan are certainly two countries having a lot of say infrastructure and good potential. But there are big companies already working on it, and we try to be more in the neutral position in terms of geometry and business outlook. So Singapore is a starting point. But yes, we are eyeing on South Korea also.
How do you be neutral, though? How does that even work? Because we know you have a factory in Italy, right? At this stage, when the US and China are going toe-to-toe, does that involve going rest of Asia to Europe? Is that where the investments in terms of manufacturing are?
Yeah, actually, the one thing we have to focus on is that we are worrying about a lot of this disruption of the supply chain because of geopolitics. But actually, one thing important for us is that we are really the important part of the supply chain. So supply chain, trying to be sitting in more neutral position is also important because we are sort of uniquely positioned to supply the technology to many customers. And then, if we are sitting in one side, and then our important mission is disrupted.
Does it also make it trickier in order to get fundraising, in order to get those investments, depending on how you're aligned?
Yes, it is. It is very sensitive, and it is all related in a sense. So it's not really good fortunate situation in terms of pure business side, because we would like to have more freedom in the businesses. But we also take it as an opportunity because we are the new company trying to design our own supply chain rather than existing company try to realign themselves into the different supply chain.
When you look at the business outlook, though, is this a new normal that you expect for the years to come, or is it just a temporary phenomenon because we have a certain type of administration in the United States?
I think it's more or less new normal if you look at the reasonable time span, like a decade. I don't think it will be changing significantly. So we have to live with it. If you look at longer than a decade, it can be, you can see that as a temporary.
It is also affecting supply chains in the form of raw materials or costs. How is that affecting your business?
Well, it's not an easy job. But I would say, again, I think it is an opportunity for us because I have luxury to design new supply chain rather than already big companies having their supply chain disrupted. They have to change it, which is not easy job.
And the technology that you provide is also perhaps a way in which supply chains can be better bolstered because you can do this cheaper, faster with chiplets, right?
Right. That's also very important. Everything was like a SoC, like an integration in the ICs before. We tried to disrupt into more chiplet kind of concept that we have the more equal share of loading in terms of supply chain.
Joon, it's been really good to get your insights on the business and the supply chain at a time when the US-China rivalry is really shaping up the business. Good to chat with you. Byung Han, I should say, is co-founder and CEO and board director of Silicon Box. And we have more exclusive interviews coming your way here at the Bloomberg New Economy Forum. The Council on Foreign Relations joining us next hour on the outlook for trade and potential US-China decoupling. And global strategy advisor Parag Khanna weighs in on the state of globalization. Much more ahead. This is Bloomberg.
Day 2 of the Bloomberg New Economy Forum is set to take on some big topics, from existential questions around capitalism to shifting ties in geopolitics and the challenges of securing global supply chains.
Yeah, and of course, AI is going to be this prevailing theme throughout. Bloomberg News executive editor John Freire will be moderating some of those conversations, and he joins us now. So, John, I think we have to talk about the AI bubble. We have to talk about Nvidia. What are you seeing in terms of the conversations that have been at this event so far? Because what was interesting to me is that some of the speakers talked about how no one country has all the ingredients for an AI ecosystem, whether it's regulation, talent, or the chips. So what do we learn from this on how government should be approaching this?
Well, I think when you come to any single one of these conferences, it's, AI is sort of the conversation that dominates everything. And today, as you say, it's day 2 of the New Economy Forum. We have Rishi Sunak will be on stage with us as one of our big speakers for the week. But really the conversation here, yes, you're right, it is about energy. For example, whether you're a small country like Singapore, whether you're a huge country like the US, where are you going to get the energy that you need to power all of these data centers that are sprouting up all over the world? We heard Prime Minister Huang talking about that last night. Singapore is talking about bringing nuclear power in as a way to sort of feed some of that energy demand. But then, of course, market valuations, has it gone too far? Big topic yesterday, too.
I mean, Avril is saying the AI bubble, and we keep talking about the AI bubble. Is it really a bubble?
Well, if you talk to Jensen Huang, he would say
apparently it's not.
It's not. So, yeah.
But when it comes to powering all of this AI infrastructure coming up, at a time when the fight against climate change is sort of taking a back seat, what happens then?
Well, that's sort of the million-dollar question, isn't it? I mean, we have, COP is still going on right now in Brazil. So far as we can tell, as always with COP, the negotiations are still very much bogged down. But you're right. I mean, yesterday, at the opening panel, there was an audience poll where our audience here was sort of polled in terms of what are the biggest risks to the world. Towards the very top, obviously, geopolitical risk, et cetera, et cetera. Right at the very, very bottom, only 4% of people said climate volatility. Now that is a huge change from like 4 or 5 years ago. That's sort of the heyday of sort of the climate, progress, Glasgow, etc. And I think that just goes to show you how the AI mania, the AI, whether it's a boom or not.
I think ESG, sustainability, it's kind of turned into a bit of a quiet fight. But it is an important conversation, right? Still.
I do, yes. One very interesting statistic on that. This year, I think it's the S&P Clean Energy Index has gone up 45%. That's almost as much as gold. I think it's almost as much as Nvidia has gained this year. So that just goes to show you, yes, it's been a very, behind the scenes, there is a lot of work still happening on climate. Admittedly, a lot of those share prices are coming from a very low level, given everything we've seen over the last few years. But, there is a lot still happening on climate, and that's one of our panels today. We'll be talking about the quiet progress on the climate
we'll be looking forward to that chat. John, thank you so much. Good to chat. Bloomberg News executive editor John Freire for us there. And a reminder of our conversations coming up from day 2 of the Bloomberg New Economy Forum here in Singapore. And of course, Shery, stay tuned because we have that big interview with Jensen Huang also coming up. Keep it here with us. This is Bloomberg. Shery, there's really one story in town this morning or this evening, depending on where in the world you are, and also one interview that we want to watch, right? The one with Jensen Huang coming up with our colleague at Ludlow. But for the moment, take a look at how Asia futures are pointing that Nvidia beating Wall Street projections, the dismissal of this bubble fear, that is really what's powering this optimism and helping to remove, I should say, the AI pessimism in the market.
But you said it, Avril, is really about the fate of Nvidia stock, the fate of artificial intelligence, and also the broader market. Really all in Nvidia's hands at this point. I mean, the largest weighting in the S&P 500 index, and you can see futures pointing to the upside, and really Asian stocks following the Wall Street gains see ASX 200 gaining, Nikkei futures also pointing higher by about 3%.
Yeah, so Asia looking like a good setup for the moment. Let's get more with Nvidia on with Beth Kindig, I should say, lead tech analyst at IO Fund. Beth, great to see you. So we are used to Nvidia clearing high bar, so perhaps in this sense, not much of a surprise. But the last time we spoke to you, I think you suggested that Nvidia doesn't have headwinds. What do you think now?
Yeah, it's so great to talk to Nvidia any night, let alone tonight. What I saw tonight in the report was really this inflection, that quarter over quarter growth. It's so important because it was the largest quarter over quarter growth we've seen in almost 2 years. That's 25%. Now, consider it was done at scale. I love what Jensen Huang said on the call. He said, we're stronger and better today than we were a year ago. And we saw that tonight. We saw NVIDIA step up and say, hey, Hopper generation was great. Blackwell Ultra can be even better. And that 25% quarter over quarter growth is a big win for the bulls tonight.
Where is that growth going to come from? Not just, from what we're seeing in the existing demand and what we know, because the thing about taking China out of the equation, do you see some of that being replaced by the opportunities in the Middle East?
I do. I think sovereign AI is a massive market that could be talked about more. I would also just go back to the fact that this is more about survival across all of big tech. Let's just hypothetically say Microsoft releases the best consumer app or the best enterprise app before Meta and Amazon. That puts them at a great disadvantage. Everyone has to continue building. Every big tech company has to continue building and buying all this compute in order to really compete and future-proof as these years go on to make sure they're not left behind.
The best offense is basically the best defense, huh? So tell us a little bit then about how NVIDIA is perhaps competing with itself and whether the Blackwell architecture can support that.
Exactly. The best offense is the best defense. And what that means is that NVIDIA is not going to let anyone catch up. They're releasing a new GPU generation every 12 to 18 months. That would have been impossible years ago. And now NVIDIA is stepping up and making sure that custom silicon and other GPU players have a very hard time catching up to them, which is one reason why I put out a new note this morning that I foresee NVIDIA reaching a 20 trillion market cap by 2030. It hinges on that product cadence.
Which is funny because only a few months back you thought $10 trillion market cap, and now given that they're already at $5 trillion, that's just growing exponentially. But tell us a little bit then about what happens with the broader AI estimates globally. Are they a little bit too low then?
Exactly. The estimates are far too low, and they've been low this whole time. That is one area where NVIDIA investors have found significant alpha, is the analysts cannot keep up with this company. Now, when we look at did I have an estimate at 10 trillion a few months ago, now at 20 trillion? Well, Jensen Huang stated that Rubin and Blackwell combined would be 500 billion in the data center. You have to rerun your model at that point. That is a massive statement. That is like a showstopper because it's implying that we do reach over a 300 billion data center segment next year. And in order to get to that 20 trillion, I only need 3x growth in the next 4 years after 2026. All very doable. And tonight put that into motion.
What is your sense of the way in which some of these AI deals are being structured? I mean, the concern that they are just feeding off each other. Is there enough demand for investors to just look past the concerns that this is a house of cards?
These are really great questions, and I can see where the concern comes up because in early stage technology, there are these large investments being made. What's unique about AI is that it's all happening on the public markets. Usually these kinds of deals are made in the venture capital world. Now, secondly, AI requires a lot of capital, much more capital than any other tech trend we've seen in the past. Therefore, it's the size of deals too that is getting people's antennas up. What I would say is that forget about the idea that this house of cards could, potentially fall, and think about the opportunity cost of missing out on AI, which a lot of investors have missed out. I think that is a far greater risk than, this strong R&D companies such as OpenAI or Anthropic not being able to monetize once the inference market takes off.
And a reminder to our viewers, we are awaiting that conversation with Nvidia CEO Jensen Huang to come anytime now. But Beth, let's talk a little bit more about the opportunities for Nvidia, because Avril just mentioned the Middle East opportunity. What about Asia? It was really interesting to see some of those deals that came out of South Korea, for example, with SK, Samsung, Hyundai as well.
Yeah, globally, this is another great point as to, are we really in a bubble? We are seeing global demand from all regions, and those regions are pouring into NVIDIA as a common denominator. And we have R&D labs in really, every major country. And that piece is very important to look at the diversity of the demand, whether it's geographic diversity, whether it's, the hyperscalers, then you look at the enterprise companies, Fortune 500, Fortune 2000. There's a lot of demand. Startups, there's a lot of demand, and it's diversified to where there's not enough supply. And we know that, but it never hurts to make that reminder.
Talk to us about whether investors should just be writing off China demand for Nvidia, though, because it's not just about whether at this stage they get access. It's also about how the Chinese are building out their alternatives or their own capabilities. And by the time Nvidia or maybe other chip makers get access to that market, might it be too late?
I think all of the points you're mentioning goes back to the fact that this is an early stage technology. And yes, I do expect market forces to shift. China has been very competitive for, a while now. And that piece, although there's no clear answer today, I would say overall, it's the rapid rate of innovation that, in my opinion, makes this not a bubble, meaning we're so early. There's so much innovation happening and we're so early, and it's early stage technology. We haven't even truly monetized AI yet. Once the inference market takes off, imagine the monetization that can occur when you're charging per token. And so that piece, there's a lot to be seen over the next 5 years before Nvidia gets to its 20 trillion market cap.
Bloomberg's exclusive conversation with Nvidia CEO Jensen Huang imminent at the moment. But Beth, let's talk a little bit about Nvidia stock as well. And of course, we have seen the incredible rally. We are seeing the late hour gains at the moment. Can this be sustained given the business outlook that we're talking about right now?
That's a question that my team answers very frequently, which is the differences between market sentiment and true fundamentals. What we saw tonight was expanding margins, expanding cash, that quarter-over-quarter acceleration at scale. Those are true raw fundamentals. And in my opinion, the market can change its mood daily, weekly, but those fundamentals went out over time. And that piece that we saw tonight is key for NVIDIA to show that regardless of how the new narrative is around, is it a bubble, is it not, .com, is it not, NVIDIA is putting up true fundamentals, and that will win out every time.
Beth, as we await this all-important interview with the NVIDIA chief, what in your mind is the number one question that you would ask him?
Wow, there's many things I would ask Jensen Huang. I would go into the specifics around Rubin, and the reason is I'm a growth investor. I have to remain in this position, and what I would want to know is how will the growth continue past Blackwell Ultra with Vera Rubin. And what I would like to know is basically, what does that new generation of GPUs look like? And hearing more specifics about that, because I've always tracked NVIDIA by GPU generation, meaning earnings mean less to me than when a new GPU generation is ramping. That's why we've remained bullish, even when there was some delays and some loss of China revenue. We saw that tonight. Blackwell Ultra is ramping. So the next big ramp, Blackwell Ultra can carry this for a few quarters. The next big ramp is Vera Rubin. My questions would center mainly around that.
Beth, Kindig, it was really great having you with us, lead tech analyst at IO Fund, of course, with an analysis of Nvidia as we await that conversation with Jensen, Huang. And of course, what we'll be watching across Asia will be the suppliers as well. Let's talk a little bit with Asia Tech correspondent Annabelle Drulers. Annabelle, so we have seen this incredible rally across Asia as well because of what's happening with Nvidia, because of, well, the concerns and the expectations of an AI bubble, AI optimism, however you want to call it. What are you watching today?
Well, I think we're going to be really seeing that big bearing that Nvidia had in the late trade, because we saw that surge. Of course, we're continuing to see that surge. What does it mean for some of its biggest suppliers in this part of the world? And there was a couple of things that was flagged during the earnings call, and probably it's going to get to it with Jensen in just a few minutes as well. But I think one of the things he flagged, Jensen Huang, already, was that big surge in supply chain costs. And that very much speaks to the Asia story, because, for instance, you had Reuters reporting just a week ago that Samsung was looking at lifting prices of its key memory chip, the DDR5, by 60% in November alone. So it tells you maybe, these companies like Samsung, like SK Hynix, we're already starting to see these signals that we're going to see a big supply chain bottleneck forming in memory chips in particular next year. What kind of impact does that have? Because, of course, margins were very much a key focus of these earnings. You can see here, for instance, this is the last trade we're showing because we do get early trading now for Korea, and you can see already the likes of Samsung, SK Hynix surging by more than 4%. Again, in those early minutes of trade, we'll get the full open at the top of the next hour. So that is going to be very much the one to watch. You just had there Beth Kindig flagging that she wants to understand more of that rollout, of that scale up of the Rubin architecture again. That comes back to the sort of capacity that Nvidia can book with companies like TSMC with its advanced packaging, that's proprietary technology, Honhai on more of the hardware side as well, and again, coming back to those memory chip plays. So it's very much an Asia story as well for us.
Yeah, with this supply chain, right, that is so wrapped in this part of the world. And we were just talking to the Silicon Box chief about this a short while ago. But Belle, talk to us as well about which of these Asia tech companies are best positioned. I mean, you talk about the Rubin potential, right? So among the pecking order in these Asia tech names, which do you think are perhaps the best poised to benefit from all this?
I mean, in terms of best positioned, there's no company that's more significant than TSMC for Nvidia. It's its lead manufacturer, of course, or assembler, fabricator of these chips. But you have seen, for instance, Honhai already flagging that AI is going to be the big growth driver for the business going into 2026, and this is very much on the AI service side. And again, this is a company that was first started as an assembler of Apple iPhones, but in more recent years, it's become better known for its key relationships that it has with the likes of Nvidia, but also the hyperscalers, Amazon, Microsoft as well. So Alphabet, of course. So, I mean, they're two of them. But I think when you look at the memory chip side, of course, it's the Korea plays in particular. And like I said, you're already getting those question marks. What kind of constraints are we going to see in memory going into 2026 in particular? It's already being flagged by companies as well in earnings over the course of this week. They're going to certainly be some of the names to watch.
And you mentioned Alphabet. Talk us through some of those rave reviews when it comes to Gemini AI.
Yeah, well, this was another story, of course, another positive story for tech overnight, because this is an Alphabet-centric one, of course. It is the best performing stock in the Mag 7 so far this year, so it just really added to that rally intraday, but surging as much as nearly 7%, so the biggest gain going back to September. But essentially, it's released its latest Gemini AI model, and it's actually been met with some very positive reviews. And it's interesting because you contrast it to OpenAI's ChatGPT 5 model, which had a more mixed reception instead. So yes, I mean, good reviews for this latest model, Gemini coming through. And again, that was a positive for the stock intraday during the session.
Right. Annabelle Drillers there with the latest on what to expect in the tech trading session today across Asia, of course, as we continue to watch Nvidia's results and the after-hour trade pointing to upside. And this, of course, after some concerns about a potential AI bubble, which Jensen Huang has dismissed. And he thinks that AI is going to be everywhere. Now his revenue forecast is pretty strong, sales to be about $65 billion in the fiscal fourth quarter. So demand for Nvidia's AI accelerator is staying strong.
I think it's worth taking stock at this whole AI narrative, right? Because it's actually been, 3 years since ChatGPT burst onto the scene, but perhaps, gaining that prominence in the past, year and a half or so. And also, it's this narrative that we are really discussing here at this Bloomberg New Economy Forum when it's taking stock of AI. Is it a pass or a fail? We also have to reassess the impact, the results, also whether companies are being good stewards, so to speak, right, of AI in general. So that is also part of the conversation as we try to bring things back to this event that we are at, Shery.
Because really it's not just about building the AI infrastructure and what this means for daily lives of everybody around the world, but it's also about how you carry out that build out, what it means for power demand. It's really interesting to see some of the stats out there. By 2030, the estimates show that data centers worldwide will consume as much power as the entire economy of Japan, which is twice the amount that they do consume today. So what does it mean for the fight against climate change, for example, at a time when we're also seeing this huge topic sort of fall to the wayside? Are we going to be able to power a sustainable future with so much AI demand out there? And of course, there's also the financing and the funding issues, right? We have talked about the potential AI bubble and circular deals. Just this week, we heard Nvidia and Microsoft committing to invest about $15 billion in Anthropic. Anthropic is purchasing $30 billion from Microsoft, and then you have Anthropic purchasing from Nvidia and using their chips when it comes to Blackwell and Vera Rubin designs for their computing capacity. So it all sort of falls into this feedback loop, which could be dangerous and risky for the broader market.
Which is exactly what investors are worried about. And it's not just about these deal-making activities that are going on, right? Because you think about as well how these tech giants are tapping the debt markets. They're going that way in terms of investment. So does that provide a bit of a risk as well for investors? And does that sap a bit of demand from sovereign debt in a way? That is another concern. But worth highlighting when it comes to Nvidia earnings, right? You were just looking at that graphic on the screens there, how it has really been a sell the fact event. The past couple of scorecards. And coming into this particular earnings report card, it was really against the backdrop of 2 weeks of AI-related stocks getting hard hit, and we were watching out for whether we got a narrative that could feed the beast, this AI monster, and keep it going when it comes to tech and the rally in stocks.
And what happens to those tech-heavy and tech-dependent economies and markets, right? In the Kospi, for example, in South Korea, Samsung and SK Hynix take about 30% of the Kospi. TSMC is about 40% or so of the Taiwanese benchmark. So what happens to these smaller markets that are very much dependent on these tech supplies? And if we're seeing this AI bubble sort of fade, or if it is an AI bubble and if it pops, then what happens to the broader economy? The Korean won, for example, has already been pressured not only because of other idiosyncratic idiosyncratic concerns about the currency, but because you're seeing these outflows from names like SK Hynix, which of course has rallied so much that the Korea Exchange had to warn about this 200+% rally that we saw year to date already.
Yeah, and I think it's important to note how this is not just affecting the stocks in Asia. It is also a currency implication for investors. Let's cross over to Bloomberg Tech co-anchor Ed Ludlow, who is standing by in San Francisco with a very special guest. Ed?
Yeah, we'd like to welcome Nvidia CEO Jensen Huang to the program. And Jensen, it's been an astonishingly busy day for you in Washington, D.C., so I'm grateful for your time. You're sold out of Blackwell. That's what you said, but also that $500 billion forecast, which is Blackwell Rubin, has room to grow. How do those fit together?
I said sales are off the charts for Blackwell, and Nvidia GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong, but we've planned our supply chain incredibly well. We have the largest supply chain in the world. Our partners, TSMC, our memory partners, SK Hynix, Micron, Samsung, are doing a fantastic job supporting us. And all of our systems partners, Foxconn and Quanta and Wistron, our packaging partners, everybody's doing a fantastic job supporting us. And we've done a good job planning for a very, very strong year. And we've done a good job planning for Vera Rubin. So sales are off the charts. Nvidia GPUs in the cloud is sold out, but we've got a bunch of Blackwells to sell.
Jensen, what's the road ahead for Vera Rubin? It's one of the most common questions we get for you of how that ramp will go relative to what we saw with the Blackwell generations.
Well, the silicon for Vera Rubin, 7 different chips are back in our labs. And the bring up is happening across engineering teams. Probably a couple of 20,000 people are working on bringing up Vera Rubin, from silicon to systems to software to algorithms. People are working around the clock, and this bring up is going beautifully. We're on track to deliver Vera Rubin about Q3 timeframe of next year, continuing our once a year cycle. Vera Rubin is already assured a huge success. Everybody's incredibly excited about it. Can't wait to show everybody. And then one last thing is that the rack architecture, the rack scale architecture is completely revolutionary. It includes a scale up switch called the NVLink. NVLink 72, our 5th generation, is the only one of its kind in the world. This rack architecture, which is incredibly complex, started with Grace Blackwell, then Grace Blackwell Ultra. It is transition to Grace Blackwell Ultra is incredibly seamless. The same rack scale architecture is going to be used for Vera Rubin. And so the supply chain is all used to it. This complexity that we enjoyed with Grace Blackwell transition, we're now incredibly smooth running. And so I think Vera Rubin's going to be just really smooth, and we're going to ramp it really hard.
Jensen, I tried to go through what the CFO Colette Kress said about China. In the quarter gone, it seemed like there was not meaningful H20 sales because the demand wasn't there, even if you were permitted to sell H20. And then in the current period and going forward, Nvidia seems committed to working with both the United States and China to sell what Colette called more competitive compute. Where do we stand with that? And could you just clarify what Colette was talking about in the current state of play for China?
The most important thing she said is that we've said for some time now, our forecast for China is 0. All of our forecast, the guidance that we showed, 0. We should start. That's the most important thing that she said. She also said that effectively China is a very important market to us. It's very important to the United States. It's very important to China. We would love the opportunity to be able to re-engage the Chinese market. with excellent products that we deliver and to be able to compete globally. The Chinese market is very large. This year, my guess is probably about $50 billion. It's great for the American people that we're able to compete in the Chinese market. It's great for the China market that we're able to provide NVIDIA's technology to them. It's great for the rest of the world as Chinese software companies and Chinese open source models leave China and are used all over the world. And so I think it's fantastic that it would be fantastic if we're able to participate in the China market. But for now, we should just assume our NVIDIA's forecast for China market is zero. We're going to continue to engage the U.S. government, continue to engage the China government to advise them and to encourage them to allow us to go back and compete in the open market. And so until then, we should assume zero.
Jensen, during the call, the US Commerce Department issued a statement saying that you are now permitted to export up to 35,000 Blackwell chips each to both Saudi's Huang and to the UAE through G42. But there are some requirements that the US has of you, in particular around controls of preventing tech transfer to China through the Middle East. What can you tell us about your understanding of what the US government's asking of you there?
That element has been around for a long time, is to prevent diversion. Of course, over the years, people have speculated about diversion. We've chased down every single concern, and we've repeatedly tested and sampled data centers around the world and found no diversion. And so this is an area that we'll continue to be rigorous on. And there's a lot of different ways to comply. And one of them, of course, is to have it be run by American cloud. Another way is just to make sure that we have measures put in place, whether technology or processes, to ensure that no diversion happens.
Jensen, the number one question I get for you is always about energy. How severe is the energy shortage in the context of AI expansion? And would you talk a bit about power and whether power is a bigger constraint for this build out than the chips themselves?
When you're growing at the rate and scale of NVIDIA, remember we're growing some 60% a year. Just quarter to quarter growth of our company is $10 billion. We grew an entire size of a company just in one quarter. And so the scale and the rate at which we're growing, everything's a challenge, which is the reason why NVIDIA has to be world-class at our supply chain, working with incredible providers and suppliers like TSMC and the memory partners and all of our systems partners, but also working downstream to work with energy providers, power generator companies, all of the land, power, and shell providers, so that we could make sure that as we launch into the marketplace, as we deploy into the marketplace, land, power, and shell will be ready for us. One of our great advantages is that we have such a large network of go-to-market. We're in every single cloud. Every single cloud service provider is a customer of ours. We're in every single GPU cloud. And so we have a large network, and not to mention OEMs, not to mention all around the world. Our customer base, our network of partners is so large that we will find nooks and crannies of power in large scale, medium scale, small scale, in different parts of the world. And so this is a huge advantage of ours. And it stems from the fact, Ed, that NVIDIA's architecture literally runs every model. And yesterday, we announced a big news with Anthropic. And so now the premier frontier models, OpenAI, Anthropic, xAI, Gemini, all the open sources, biological models, physical AI models, everything in the world runs on NVIDIA. And as a result of that, irrespective of which cloud provider you are, it is fantastic that we can deploy in your cloud because the offtake will be incredible.
Jensen, we can see where the hyperscalers are getting the money, where they have the money to deploy and build. But you mentioned Anthropic. With Anthropic, or indeed OpenAI, they have tens of billions of dollars of commitments around the world. Very simple, like how do you know that OpenAI is good for it, that it will be able to find the money?
Well, we're thoughtful, along with OpenAI, thoughtful in aligning on and taking into consideration visibility of demand and their financing capabilities. All of that has to be in accordance, has to be aligned, has to be coherent before we start to build out. And so I think the ambition's large, but the execution is disciplined. And that's really, really important to recognize. We're very disciplined with our investment. We're disciplined with our build out. These are very large scale investments. And so the two teams are quite disciplined, very disciplined in thinking through the investment levels. Now, it's also important to take a step back and realize that OpenAI, Anthropic, these are the fastest growing company in the history of humanity. Their offtake, their end market demand is absolutely real and absolutely incredible. And you could see that they're really struggling to keep up with the demand that they have. The engineering teams, we work incredibly hard to make sure that we bring them on more capacity, but also optimizing their stack so that the usage of whatever capacity is as efficient as possible. And meanwhile, there's so many new use cases that they want to put out into the world, and is currently limited by the capacity they have. And so this is a really important time. You're seeing an exponential growth in the amount of compute demand necessary for AI. You're seeing an exponential growth of adoption and use of AI. And the number of applications that are going to be using these AI is also growing. And so we've got to do our best to support the scaling out of two of the most consequential companies in history. And we're delighted to be partnered with them.
Jensen, investors have been worrying about depreciation. Software can actually extend life. Like there are A100s out there in the real world still at full utilization. Are people underestimating how long your chips stay useful, or are they kind of misunderstanding in the context of depreciation how you're handling generation to generation updates of GPU?
NVIDIA is unlike any other accelerator. And the reason for that is because of CUDA's diversity of capability and versatility. Remember, I said two things earlier. I said the fact that NVIDIA participates and could accelerate every phase of AI, pre-training, post-training, and inference. We're the only architecture in the world that does that fantastically. The second thing we do is we run every single model. And so most agentic systems, most clouds are running so many different diverse type of models, language models, vision models, biological models, chemical models for all the different fields of science. NVIDIA could be used across the entire lifespan of the technology. And so if you look at products that we shipped, Ampere A100, we shipped 6 years ago. But because we're continuing, our install base is so large, our diversity is so great, we could continuously update our software, bring value to our customers on the one hand, but because our versatility is so great, based on the capability they need, they could use our GPUs for a very, very long time. Now remember, A100 is 6 years old. However, it is still an order of a magnitude faster than any CPU could put to bear. So it is still the best computer. It is still the best processor for much of the workload in the cloud. And most people misunderstand that because unlike us, most accelerators are kind of singular use. Because they don't have diversity, because they don't have versatility, because they're not great at every phase of AI, once they're used for whatever they were designed to do, their value falls off a cliff. That is not true with NVIDIA.
Jensen, my final question is a point of clarification, if I may. You were asked on the call about content and Nvidia's contribution to any given piece of AI infrastructure. And what you said was Hopper around 20 to 25, Blackwell about 30. Were those figures billions of dollars in dollar terms on a 1 gigawatt data center, or were you talking about percentages of total cost?
Oh, thank you. Billions of dollars. Billions of dollars. Yeah. And so for our Vera Rubin system, a 1 gigawatt data center is probably something along the lines of 50 to 55. And NVIDIA's contribution is probably about 35 of that.
NVIDIA CEO Jen-Hsun Huang. Billion noted. I was asked to ask you, the question's been asked and answered. Astonishingly busy day for you in the nation's capital, Washington, D.C.
That's a great question. The difference between percentages and billions is a big deal. Yeah, it's in billions.
The stakes are high, but we're always grateful for your time. I know it's been a busy day. Thank you for joining us on Bloomberg Television. That's NVIDIA CEO Jen-Hsun Huang. Back to you guys.
And a great exclusive conversation there with Bloomberg's tech co-anchor Ed Ludlow. Of course, we have been watching NVIDIA's results, and we get it now. I mean, Jen-Hsun Huang pretty optimistic and really sanguine about the outlook when it comes to demand for artificial intelligence and the infrastructure build-out right now. We had, of course, seen concerns about an AI bubble, but CEO Jen-Hsun Huang talking about how disciplined they are about open AI investments, and of course, how their forecast for China data centers is zero at the moment, but that they'll continue to engage with the U.S. and China as well. You can see after hours trading NVIDIA up 5%. And right now, the Nikkei stocks and Kospi stocks all coming online to the upside, with the Kospi gaining more than 2.5%. And this really to do with that artificial intelligence boom and exuberance. SK Hynix also gaining more than 3% at a time when we have seen Samsung and SK Hynix take about 30% of the Kospi. And a little bit of downside pressure in the last few sessions when we actually had the AI tech sell-off.
Yeah, and also cognizant of how he says the business is very, very strong and how it's really about putting things in every nook and cranny. And to some of our analyst points earlier, right, that for this business, the world's most valuable company, they don't have headwinds. You talk about strong demand. He's saying that they have plenty of Blackwells to sell, so don't even have supply issues. And then when it comes to the Vera Rubin design, their expectation is that it will ramp up well. So it looks like all systems go. Today we'll watch how that continues to filter into the markets for the moment. Also looking at treasuries on the 10-year yield, we are seeing the continued pressure on the bonds there because of what we got from the Fed minutes. But NVIDIA's outlook really helping to rekindle the risk-on mood for investors. Let's get to our Asia Markets Executive Editor, Paul Dobson. Paul, we just heard from Jen-Hsun Huang. How much does this put a floor on any AI pessimism for APEC?
Good morning. It's certainly going to help the mood around tech valuations, and that's particularly important, of course, for lots of our region where the indexes are tech weighted. And, you know, the doubts that the market has been having are not just about Nvidia, but they're about the companies that are building the data centers, whether they can get the financing for it, whether they can make a profit off it at the end of it. I don't know if we're going to get all of the answers to that from Jen-Hsun Huang, to be honest. You know, great for his company if there's massively strong demand for the chips. But the proof will be in the pudding, in a way, in the companies that are using it, in the demand that we see for it. Now, you were talking earlier to me about the Gemini 3 product from Google and the rave reviews that's had, showing, you know, kind of a bit of a progress in actual, you know, utility of AI products. And I think that that's actually a better story for the market at this point in time, almost, than Nvidia's own commentary. And so therefore we've got that sort of double whammy that's going to be giving the market support today. You can see it already in Korea and Japan. I don't think all of the doubts are going to vanish overnight, but I do think that buying the dip has been such a strong reaction for investors, and particularly the retail investors anyway, that this will give people confidence maybe that we can get that Santa rally, that year-end rally that the market had been hoping for, and that this November has so far been disappointing us on.
Yeah, the Nikkei now rallying 3%, the best day in about a month. So can we expect this exuberance to continue, and what will be the next catalyst for Asian markets?
I mean, the counterpoint that we've been talking about is the outlook for the Federal Reserve and the interest rates in the US. The market had sort of been counting on the idea that the Fed was in the middle of a cutting cycle and was going to carry on in December and then do some more in Q1 next year. But the minutes that we have from the Fed, the lack of data that the US is going to be releasing has all put enough doubt in the market that we're only priced about 30% now for a cut in December. So that disappointment has also been factored into the market. That's part of the reason that we've seen a more negative price environment in November. And so paying attention to what US policymakers are saying, the data that we do get, what does that show for the US economy, is still going to be important and set that tone and the narrative for a lot of the markets through to the end of the year. One thing that you do get as a result of the Fed not cutting is a stronger dollar, and that's not a good thing for a lot of the markets in our region where the central banks are under pressure. Currencies are close to lows, and weakening as well. You know, not just the yen, but obviously that one sort of stands out for many reasons, but also some of the emerging market currencies around the region, like the Philippine peso, for example, the Indonesian rupiah, and over in India as well, the rupee. So other things to watch out for, but you know, we know that the salient narrative for today, at least, is going to be that tech-driven recovery.
And can't forget the yen as well, as we see the Nikkei jumping 3%, just to recap this tech rally on the back of Nvidia earnings. Paul, thank you so much. Our Asia Markets Executive Editor, Paul Dobson. We have more ahead on the Asia trade. This is Bloomberg.
We're seeing the market reaction across Asia to Nvidia's results, and this, of course, coming off the back of a strong revenue forecast and CEO Jensen Huang dismissing that AI bubble fear. And you can see right now SK Hynix rallying more than 3%, SK Hynix, Samsung both taking up about 30% of the Kospi, and at one point the Korea Exchange warning about SK Hynix's gains of 200% plus this year already. And you can see SoftBank also 1 point rallying more than 9%. SoftBank very much invested in the artificial intelligence build out. They, of course, have billions of dollars in OpenAI. All of this coming at a time, Avril, when we're talking about the US-China tech rivalry and the bifurcation of supply chains.
Yeah, we heard from Jensen Huang how he would love to re-engage with China. Would be fantastic, right, if they have access to that market. And you talk about this tech bifurcation. This is a conversation we've been having for years now, right? And it's how the US and Chinese economies, the extent in which they can really decouple. Let's turn our attention to that very narrative. With us now is Shannon O'Neil, Senior Vice President at the Council on Foreign Relations. So great to have you, Shannon. I mean, when we look at AI, that is really front and center, right? And that's frontier technology that is at the heart of the competition between these major economies. How do you see things shaking out? And how does the trade war affect all this?
Well, it's been a long path of delinking between the two economies, right? It's not just this year, it's not just last year, it's been almost a decade of this. But right now, obviously, this is at the heart of it. AI based on chips, based on other technologies, where you are seeing real bifurcations through export controls, through licenses on rare earth and magnets and the like. And while we've seen a ceasefire when Trump and Xi met in Busan, we've seen sort of a calming down of this. I think it's only really a ceasefire. We're going to continue to see these two economies, and in particularly in the tech sector, these two economies move apart.
The extent in which they can truly decouple, though, what do you see a couple of years from now?
I look back at these last several years, and you have started to see really, especially on the Chinese side, moving away from the U.S. economy, even before tariffs, even before these export controls on the Trump administration. China was trading more with Southeast Asia. It was trading more with Russia than Germany. It was already starting to move away. So as I look the next 2 years, I think we continue to see that. And if anything, it accelerates. We start seeing moving apart, and particularly China pivoting and looking to the rest of the world.
I mean, that's been the conversation here at the New Economy Forum, right? The HSBC CEO saying that Asia buys Asia is the new key trend when it comes to trade relations now. Although I do have to put a caveat there, because we're also seeing disputes among the Asian economies. China, Japan continues.
And that is true, right? There are lots of disputes, geopolitical disputes within Asia. Though I would say we've seen a doubling down between China and the ASEAN nations, right? Upgrading their free trade agreement. You see lots leaning into RCEP, the Regional Comprehensive Economic Partnership. So there is a framework for this. But at the same time, for lots of Asian economies, China is a huge benefit, right? There's lots of foreign direct investment. There's technology sharing and the like. But it's also a big challenge, right? You're seeing markets flooded with, textiles, with furniture, with EVs, with other things that they also have ambitions to produce themselves. So that, I think, is a challenge for lots of the Asian nations.
And the thing is that the U.S. has been unhappy with this global world order for a very long time, right? This is not about the Trump administration 2.0 coming into place and just applying tariffs everywhere. So does that mean that the new global world order will persist even after Trump 2.0?
I think that's right. You look at the U.S. and bipartisan, there are, frustrations with the order that it has been, frustrations with the WTO, with some of the rules there. But what I think is interesting right now is, yes, the United States is taking actions, tariffs and other things, but the rest of the world is responding. There are reactions. And there I see lots of nations, the European Union and others, going out and signing all kinds of free trade agreements or negotiating them with India, with Malaysia, with Singapore, with other countries in Asia, with South America. And so I think as we look at these next few years, there's going to be a fundamental rewriting of trade rules, not just from the United States, but from others.
What has been the true cost, you think, of this pursuit of economic policy in this manner for U.S. competitiveness?
On the one side, the U.S. is still one of the biggest, wealthiest consumer markets, and we have seen lots of promises of foreign direct investment, and some of that will appear. We are going to see, and we already see, is back to the AI and technology, huge investments in the United States in those sectors. That will continue. I think the challenge here is you're going to get much less bang for your buck, because to build those data centers, to build that energy network, it's just going to cost more money bringing in steel, aluminum, and other things because of tariffs.
When it comes to China, what is your sense of the vulnerabilities in the economy, in that market now?
I mean, there are vulnerabilities, obviously, in consumption. There's vulnerabilities in, the demand that it has within China. And there are still vulnerabilities in the tech sector. There's been huge gains and huge breakthroughs in China. But we are coming down to chips in many ways. And there they do maintain this vulnerability.
We have seen the U.S. administration, of course, really carry out the friendshoring. And there have been some clear benefits for, say, South America, Latin America, Mexico. At the same time, the Trump administration is pursuing other policies on immigration, talking about potential attacks into Mexico in order to fight the drug cartels, of course, alienating Colombia as well. How do all of those different policies work out?
This is a big question. I think the biggest change from the Trump administration, from previous administrations, is it's so unilateral. And so whether we're talking trade, whether we're talking security, whether we're talking diplomacy, it really is the United States for the United States. So I think there's a lot of transactions to be made. There will be that nearshoring. Lots of companies will continue to source from countries in the Western Hemisphere. But it's going to be a much heavier hand, as we've seen on the security side. And that will be a challenge.
When all of those themes converge, and it's not just the economy and trade policy, but security issues together. How much more complex does it get navigating these challenges for other economies across Asia?
I think it's really complicated, but what has been interesting to me as I look at the trade agreements that have been signed with the United States, with Malaysia, with Thailand, with Vietnam, with South Korea, Japan, Australia, there's a bit of an exchange here. If you provide foreign direct investment, if you open up your markets, there's a security aspect there. We saw that with with Australia. AUKUS was back on the table when they said they would provide critical minerals. We've seen it with South Korea, investing in Philadelphia and shipbuilding. You get back on nuclear submarines. So I think we are going to see even more from the U.S. government ties between trade and security.
You were alluding to some of this earlier about this being a trend that lasts past perhaps this administration even. Talk to us about crystal ball gaze for us, right? Past this administration, what sort of U.S. economy and global trading order will the next administration perhaps be inheriting?
Well, I think we will continue to see tariffs, right? They may change, but we're still going to see tariffs from the United States. And I think those are very hard to roll back. We've heard that here at the forum over the last couple of days. I agree with that. I think that is a change. But we're also going to see a couple of years from now, I think, a fundamentally different lay of the land in terms of other free trade agreements. So the next U.S. president will have to deal with that table that's been set by China, by countries in Asia, by the European Union, by all others who are signing agreements. So I think as we go forward, it may not just be the United States that's leading on this. They'll have to accept the world as it's reshaped itself, and in particular the global economy.
Shannon O'Neil, really good to have you with us. Thank you so much for that conversation every year at the New Economy Forum and these subtle changes when it comes to geopolitics. Senior Vice President at the Council on Foreign Relations. We do have more ahead on the Asia trade. This is Bloomberg.
Sales are off the charts for Blackwell, and Nvidia GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong.
Nvidia CEO Jensen Huang really sounding very optimistic about the demand outlook when it comes to their AI accelerators. He's seeing strong demand. He talked about the Blackwell chips, also the Rubin designs, of course. And we continue to see the rally across Asian markets right now responding to that optimism in the AI sector.
It's as if the last 2 weeks didn't happen, Shery. That immense selling in tech stocks, right?
Until you get to December and you get Oracle earnings. So
yeah, you have the continued digestion of earnings, but also let's not forget we have the September jobs report that is also coming up in the next day at a time where we have to be aware as well that when it comes to the Fed decision, does the focus kind of shift towards that, especially given now we won't be getting October data on the jobs market in the US, and the November numbers are actually going to be coming out after the Fed decision. So how long does this party, how long does this music keep going on for?
And then if you're hearing some noise here where we are, Avril and I are at the Bloomberg New Economy Forum 2025, thriving in the age of extremes. And Avril talked about our party. The party's getting started here. And some of the conversations, of course, are around artificial intelligence and perhaps what happens to sustainability issues given the amount of power that this infrastructure demands.
Yeah, whether the energy demand can be built up in a sustainable manner. And, we talked about how this is like a quiet fight in the background, but it's still worth bringing up that conversation. We have more ahead on the Asia trade from right here at the New Economy Forum. Keep it here with us. This is Bloomberg.
Nvidia's forecast for China market is 0. We're going to continue to engage the U.S. government, continue to engage the China government to advise them and to encourage them to allow us to go back and compete in the open market. And so until then, we should assume 0.
Hearing there from the chief of the world's most valuable company.
$5 trillion.
That's crazy numbers. I mean, look at how that has influenced trade in Asia, right? We're seeing stocks in the region in a really good mood. Maybe that also trickles through into FX as well, as we keep an eye on the Fed minutes and the data that's coming out tomorrow. But let's stick with the Nvidia scorecard and discuss the Asia implications. Our tech correspondent, Avril, joins us. So, Belle, we are seeing this really fierce market reaction to the numbers.
Yeah, you said it there. I mean, the biggest beneficiary so far is what we're seeing in Japan. But just breaking it down, some of the biggest movers in the session so far today, you've seen SoftBank, for instance, surging more than 9% at the peak, but now around 7%. You're seeing iBiden, Advantest, Screen, Disco. These are all some of the names that are listed in Tokyo that are jumping quite significantly in the session today, to the tune of 8% plus. In Korea as well, I mean, you get that very strong read across as well. You've got the likes of SK Hynix, Samsung, again, two key suppliers that are very much bouncing in the session today. So it is good news, of course, for these businesses, these numbers, because it does seem at least that going into these figures, Jensen Huang had so much pressure on his shoulders, at least from investors, to try and assuage these fears around unconstrained spending, AI bubbles, and it does appear that he's met the key benchmarks in terms of revenue outlook, in terms of scale-up of key architecture like Rubin, for instance, the Blackwell rollout, that's been enough to calm those fears for now.
We have heard from Jensen Huang also talking about that surge when it comes to the supply chain costs. Did he say anything about key Asia suppliers?
Yeah, exactly. I mean, that was sort of the key point, I think, and it was made as well by our Bloomberg intelligence analyst, Charles Schum, who said that really there's no doubt about the demand that we see for Nvidia products. So we know that that is very much secure, and we heard from Jensen Huang in that exclusive interview this morning, really, again, reiterating this, that they're pretty much fully booked out at this point. I think the question, and what as well Jensen Huang sort of nodded to, was that this is a company that is growing so fast, adding $10 billion in capex each, or rather in market cap each quarter. You're growing at the size of an entire company each quarter, and that puts pressure because it's challenging, and you've got to have those really solid relationships with your supply chain. And he actually referenced the names like TSMC, for instance. But again, going back to those supply chain bottlenecks, as we've been discussing, a key one that's forming is in the memory space, and we've been hearing this from different CEOs in these earnings period, and talking about how that could again become a constraint, especially in 2026. And he did sort of reference that as well. So how much capacity they can book with the likes of TSMC, how much they can work with Honhai, again, to scale up on those AI server side, what they can get from the memory chip plays as well.
Belle, when it comes to the Mag 7s, it's not just Nvidia that's done really well this year. Alphabet, also another star player, and shares were another big mover in the session. Talk to us about what was driving this.
Yeah, that's right. And to your point, Alphabet is actually the best performing stock so far this year in the Mag 7. So it really speaks to what has been a very strong performance of a nearly 60% jump at this point. But intraday, it was again, positive numbers for Alphabet. And that was after it unveiled its latest ChatGPT equivalent, but this is the latest version of Gemini. And what's interesting, actually, when you compare it to the tool from OpenAI, is that actually Gemini has been met with much stronger reviews, and so this is, of course, a positive for the business. I mean, we're hearing things like there's benefits on search engagement, there's been benefits on monetization, and also Google able to combine real-time web inferencing with advanced model training. So that is kind of been seen by some analysts that we spoke to as a very much a key competitive advantage for this tool going forward. So yes, I mean, you could see over 2 days up 3%, but again, that strong session intraday.
Yeah, Annabelle Drillers there with the latest on the tech sector and, of course, that competition over artificial intelligence. But it's really about NVIDIA's strong revenue forecast for the current period that's helping counter concerns that a global surge in AI spending is poised to crash.
And the CEO, Jensen Huang, spoke to us exclusively about the outlook for NVIDIA and the AI sector.
Sales are off the charts for Blackwell, and Nvidia GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong, but we've planned our supply chain incredibly well. We have the largest supply chain in the world. Our partners, TSMC, our memory partners, SK Hynix, Micron, Samsung, are doing a fantastic job supporting us. And all of our systems partners, Foxconn and Quanta and Wistron, our packaging partners, everybody's doing a fantastic job supporting us. And we've done a good job planning for a very, very strong year. And we've done a good job planning for Vera Rubin. So sales are off the charts. Nvidia GPUs in the cloud is sold out, but we've got a bunch of Blackwells to sell.
Jensen, what's the road ahead for Vera Rubin? It's one of the most common questions we get for you of how that ramp will go relative to what we saw with the Blackwell generations.
Well, the silicon for Vera Rubin, 7 different chips are back in our labs. And the bring up is happening across engineering teams. Probably a couple of 20,000 people are working on bringing up Vera Rubin, from silicon to systems to software to algorithms. People are working around the clock, and this bring up is going beautifully. We're on track to deliver Vera Rubin about Q3 timeframe of next year, continuing our once a year cycle. Vera Rubin is already assured a huge success. Everybody's incredibly excited about it. Can't wait to show everybody. And then one last thing is that the rack architecture, the rack scale architecture is completely revolutionary. It includes a scale up switch called the NVLink. NVLink 72, our 5th generation, is the only one of its kind in the world. This rack architecture, which is incredibly complex, started with Grace Blackwell, then Grace Blackwell Ultra. It is transition to Grace Blackwell Ultra is incredibly seamless. The same rack scale architecture is going to be used for Vera Rubin. And so the supply chain is all used to it. This complexity that we enjoyed with Grace Blackwell transition, we're now incredibly smooth running. And so I think Vera Rubin is going to be just really smooth, and we're going to ramp it really hard.
Jensen, I tried to go through what the CFO Colette Kress said about China. In the quarter gone, it seemed like there was not meaningful H20 sales because the demand wasn't there, even if you were permitted to sell H20. And then in the current period and going forward, Nvidia seems committed to working with both the United States and China to sell what Colette called more competitive compute. Where do we stand with that? And could you just clarify what Colette was talking about in the current state of play for China?
The most important thing she said is that we've said for some time now, our forecast for China is 0. All of our forecast, the guidance that we showed, 0. We should start. That's the most important thing that she said. She also said that effectively China is a very important market to us. It's very important to the United States. It's very important to China. We would love the opportunity to be able to re-engage the Chinese market with excellent products that we deliver and to be able to compete globally. The Chinese market is very large. This year, my guess is probably about $50 billion. It's great for the American people that we're able to compete in the Chinese market. It's great for the China market that we're able to provide NVIDIA's technology to them. It's great for the rest of the world as Chinese software companies and Chinese open source models leave China and are used all over the world. And so I think it's fantastic that it would be fantastic if we're able to participate in the China market. But for now, we should just assume our NVIDIA's forecast for China market is 0. We're going to continue to engage the U.S. government, continue to engage the China government to advise them and to encourage them to allow us to go back and compete in the open market. And so until then, we should assume 0.
NVIDIA CEO Jensen Huang speaking exclusively to Bloomberg tech anchor Ed Ludlow. We have more ahead on the Asia trade. This is Bloomberg. Bloomberg Open Interest.
It's Netflix versus YouTube.
100%. I do think in the world of more AI slop, people are going to look for destinations where they really want higher quality, curated, high production storytelling.
But YouTube is crushing it. I mean, I have both.
Absolutely.
But,
I have both.
But one thing YouTube has is like, I don't have to pay for YouTube. Are these real threats to Netflix?
Netflix is the luxury equivalent. Consumer product is consumer tech.
Don't miss Open Interest live weekdays.
Didn't really think I had a problem.
I would isolate, self-medicate.
Like 48.5 million Americans, they didn't choose addiction. Go to shatterproof.org/find treatment. Watch the film No More Secrets and find out how you can get help. That's shatterproof.org/find treatment.
Welcome back to the Bloomberg New Economy Forum 2025, where we're discussing everything about how AI, geopolitical dynamics, not to mention, of course, trade tensions are reshaping the global order. Our next guest is a global strategy advisor and author of books, including The Future is Asian. He's advised governments and corporations in more than 30 countries. Joining us now is Parag, Khanna, founder and CEO at AlphaGeo. Always good to have you at NEF.
Thank you.
So we keep talking about this bifurcation, U.S., China, the trade tensions ongoing.
That's right.
Is this a bipolar world, or are there more players that we should be aware of?
Well, the bipolarity is an assertion, has gained new currency after Donald Trump's recent visit to the region, where he, before his meeting with Xi Jinping, said, we are in a G2 world. And that was viewed as some kind of a tacit or explicit recognition that now the world is in, not necessarily in a new Cold War, but that there's two powers that are head and shoulders above the rest. But I want to actually step back for a moment. And before he met with Xi Jinping, he landed in Kuala Lumpur and he did that dance at the airport just to remind everyone where we are in the news cycle. That was a couple of weeks ago. But afterwards, he signed a deal with Anwar Ibrahim that related PM Anwar of Malaysia about rare earths, for example, among other things, because Malaysia is a major destination for semiconductor investment and so forth. And PM Anwar was asked a couple of days later, do you feel intimidated by Donald Trump? Were you kowtowing to Trump because of his assertiveness of America first and all the tariffs? And he said, if I was intimidated by President Trump, why would I have signed a deal with China the very next day? And this is a reminder that countries like Malaysia are practicing multi-alignment. They don't view the world as being only two choices. They want to deal with everyone.
It's about looking after their own interests, right? When it comes to AI, though, we have to talk about that. What is your sense of how these different countries are approaching that in terms of competitiveness and building their workforce?
So AI becomes one example among many when it comes to the suite of technologies that will dominate the early 21st century or beyond, whether it's AI, robotics, biomedical, energy, and so on. They're not viewed as a package. It's one by one by one. And in the same way that a country might be deciding who am I going to have a trade partnership with, who am I going to buy defense equipment from, who's going to launch my satellites, who am I going to buy medical equipment from, which stock exchanges am I going to list with. Technology falls into that same pattern where a country, from its perspective, says, who's going to give me the best deal? Am I going to have China build my high-speed rail, or Japan build my high-speed rail, or a European country build my high-speed rail? Same thing with AI.
No wonder we're seeing more countries wanting to build out that AI ecosystem, including, of course, India, and talking about standing up to President Trump. Prime Minister Modi really playing a big part.
So when we talk about AI, it's sovereign AI is what you're often hearing is the prefix, which is I want my own AI. Now, of course, we know from an economic standpoint that's going to lead to overcapacity, this excess capex, some redundancy. But the new post-COVID mantra, in a way, is let's have that sufficiency, self-sufficiency, and also in a tariff world, in a fragmented world, in a world of geopolitical competition, you want to ensure that resiliency of your own supply chains. That applies to AI too, because you also have the data privacy issues. So India is a big player in this because technology is diffusing rapidly. India is hugely technologically capable. It effectively has a sovereign stack, to be clear. Their payments, their identity systems are used by 50 countries in the world. When we talk about the world being divided between the US and China in technology, aren't we kind of missing something when you forget that there are 50 countries that are using India's open source, right, non-invasive, non-surveillance, right, from a friendly country. And that's just the beginning of what is going to be a diffusion of technology, and it'll be a marketplace just like any other good that you are trying to procure. You can choose from many powers to provide it.
And the thing about it is also India has the talent to build all of that out. So I wonder, what is your sense of among the governments? I know you've visited, 150 countries?
Or so.
Who are the ones that are getting it right in attracting the right talent?
This is the big question because, the world population is peaking and we can have a separate conversation, but that's underway and it will decline soon. So the war for young talent is, to me, the operative principle. If you want to determine which countries are going to succeed and fail in the future, you literally just need to follow young people as they vote with their feet. And even though Europe, for example, has a dearth of really credible high-end software engineers, they're recruiting them en masse from India. And when Trump instituted those H-1B visa surcharges, the German government took to social media in India and in the US and even in Canada and said, if you're worried about the stability of come to Germany. And that's not what you think, that's not what you hear day to day out of European politics. You hear about populism and xenophobia. Instead, actually, the ground reality is a heavy recruitment push to bring young tech talent from Asia in general, from India in particular.
On the flip side, then, are we seeing the supremacy of America sort of fading given some of the policies that this administration is implementing?
Well, the headline you've given to this summit is actually the future of Asia in an America first world. And my recommendation was actually call it the future of America in an Asia first world. Oh, wow. Because the subtext to all of this is that Asia has done the best job of integrating economically. Think about the Regional Comprehensive Economic Partnership, which came into effect 3 years ago. The trade volumes between just China and ASEAN, the Association of Southeast Asian Nations, is going to reach about $1 trillion this year. So if you think about Asia as a mega region comprising China, Japan, Southeast Asia, India, even the West Asian countries and Australia, this is by far the largest trade zone on Earth. It needs the rest of the world much less than the rest of the world needs Asia.
These are also economies where there's immense inequality.
Yes.
Then you bring in AI as a sort of great equalizer. Is it really going to be that?
I think when you think about Asian growth, it's both and not either or. Right now, when you have very mature economies that already have high employment and you have rapid technological displacement in the services sector, that's problematic. And that's why you're seeing that, graduates of American colleges and universities aren't finding jobs. In Asia, there's tons of jobs in the real economy, in construction, in all of these sectors that don't necessarily aren't going to be displaced by AI anytime soon.
I'm told we're out of time, so super quickly,
right.
But I really want to ask. These economies in Asia are also very idiosyncratic. They have cultural barriers. They also have historical, territorial issues among themselves. Can they overcome that?
They have so far. I mean, we're 35 years on from the end of the Cold War, from the collapse of the Soviet Union. And in fact, Asian countries have done a good job of pushing their geopolitical rivalries somewhat to the side, although they're still very live and dangerous, but focusing on a geoeconomic convergence that I was just mentioning earlier. And that is still underway, especially in response to Trump's tariffs. So even rivals in Asia have said, you know what, we definitely find mutual benefit in trading more with each other, even if we don't like each other.
They end up drawing even closer to each other.
Absolutely.
Parag, really great to get your analysis on all this, your insights. Parag Khanna is founder and CEO at AlphaGeo. And of course, a reminder of some of the big names speaking today here at the Bloomberg New Economy Forum. This is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next?
On this episode, as global leaders converge on South Africa for the G20 and B20 meetings, we get to the heart of where the investment opportunities lie at Bloomberg's Africa Business Summit. Premieres November 21st, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia trade. This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Singapore Prime Minister Lawrence Wong says fierce competition between the U.S. and China will persist despite the recent trade truce. He was speaking to us here at the Bloomberg New Economy Forum. Take a listen.
I visit China regularly just to find out how things are developing. And all the actions that America takes vis-a-vis China has, in a way, only strengthened their resolve to work even harder, to move faster on technology self-sufficiency, and they are determined to grow. So one China commentator tells me there's nothing America can do to stop China. Only China can stop China. And when I heard that, it reminded me of something I heard a long time ago about the US too. There's, Abraham Lincoln once said, if destruction be our lot, let us, Americans, be the author and finisher of it.
When we talked about the region, you said you didn't think there was the war coming on or anything like that. But there is. Do you think in the end, a country like Singapore will have to choose between China and America? You've managed to avoid that so far.
Yeah, another favorite question.
Yes, it's coming that way. Journalists are notoriously unoriginal, but the problems don't change. No, the choice is arguably getting bigger.
The pressures will always be there. The great powers say we don't want you to choose, but of course each one wants us to be a closer friend to them. And that's always, the tension is always there, the pressures will always be there, but at the end of the day, we don't have to choose, really. We have to, it's not issue by issue. There will be some instances where we look at the issue, and we so happens that the particular position we take is the same as the US, for example, or as China, for example. But it's not from the lens of choosing one versus the other. It's from the lens of Singapore's national interest. And that will always be the case for us. And it's the same, not just for Singapore, it's the same in ASEAN. ASEAN countries feel the same way. We have been the arena for proxy wars before. It's been such a painful experience. We don't want that to happen again. And so ASEAN will continue to be fiercely independent.
But when Xi Jinping and Donald Trump met in South Korea, you called it a temporary truce. And I wonder, you've just seen this spat going on between Japan and China over Taiwan. How precarious does Asia feel at the moment?
I thought, first of all, going back to the meeting between the two leaders, President Xi and President Trump, it was a good meeting. And while it may be a temporary truce, a temporary stabilization in the relationship, it's much needed. And it will provide guardrails for the two powers to engage one another. It will open up channels of communication. It's not just once off, because the two leaders will meet probably 4 times next year, because President Trump has said he would visit China, President Xi will probably visit back, and then there's APEC in Shenzhen and G20 in Miami. So many opportunities for engagement, and it's much needed for stability. The intense competition and rivalry will continue, I'm sure. The mutual suspicion and distrust remains, but the guardrails will ensure that the rivalry does not slide into a full decoupling or worse, confrontation and conflict. So on that, I'm slightly hopeful after seeing the rapport, the engagement that the two of them had.
Singapore's Prime Minister Lawrence Wong speaking to Bloomberg Editor-in-Chief John Micklethwaite. And of course, subscribers can also turn to the terminal for more on the Bloomberg New Economy Forum. Great conversations happening here at this event as we look ahead to the open of trade in the Greater China region. Here is where futures are pointing, following on from those Nvidia earnings. That's it from the Asia Trade. Our markets coverage continues. This is Bloomberg.